Well, hi, Capri. How are you today?
I'm good, Philip. How are you?
Very well, very well. It's been a couple weeks since we last visited. Just so you know, you're healthy. You got a policy.
Oh,
So, what we are going to do today is I'm going to walk you through your policy. And the
okay.
reason why I want to do this is um, we want you to be 100% comfortable with what we are offering you today because
Okay.
I've told many, many people this. It doesn't matter what I say, it doesn't matter what you think. Doesn't matter what anybody else says. It's
Mm-hmm.
whatever's in the
In the
contract.
contract.
Because, in Canada, insurance companies are heavily, heavily, heavily regulated. And by being regulated, they have to abide by their contract.
Yes.
So we're going to go through this.
Okay.
And the nice thing about doing this is for whatever reason,
Mm-hmm.
after we go through this, you decide that, it's not for you, or maybe I gave you misinformation, or you just don't want it. You have 10 days after I give this to you to
Okay.
make your final decision to cancel this policy.
Okay.
Okay. But before we go through this,
Mm-hmm.
when we last met, the big concern I had was you doing your wills and power of attorney. Did you complete your wills and power of attorney?
Not yet.
Not yet. Now, I know one of the concerns you had was making sure that you were getting guardians for your children and the proper executor. Have you figured out who those people are going to be as of yet?
Pardon?
Have you figured out who your executor or guardian of your children are going to be as of yet?
Okay.
Because with your will, you have to name an executor.
Okay.
You also have to name guardians for your children. Have you determined who those people will be?
My husband.
Okay. Okay. Because one of the things that we do here at High Point is if you know who your executor and guardians are going to be in your beneficiaries, we have estate planning sessions
Yes.
that they can come out, they can learn more about what their roles and responsibilities are.
Yes.
Okay. But we keep coming back. Wills and power of attorney are vital to what we do. Okay. So let's go through this policy and you're going to learn a lot. It is a very daunting policy. You see, there's lots of information in here, but we're
Okay.
going to go through it and this is your copy, so I'm going to leave with you. So
Okay, sure.
I want to start with the very basics.
Okay.
Is that how you spell your name?
Yes.
And is that your date of birth?
Yes. That is my date of birth.
Fantastic. We
So,
got that right. That's a
yeah.
good
Yeah.
start.
That's
Now you'll notice here that your premium, as we stated, is $95.28.
sense. Yes. That is for monthly.
That is a monthly
Monthly.
premium.
Okay.
Yes. And you'll notice that the policy and the company we went with is Beneva.
Okay.
And you may not know who Beneva is. They're a pretty large company. They only have about $27 billion of assets under
Wow.
management. They've been around about 80 years. But more importantly, they're the largest mutual insurance company in Canada.
Okay.
And why that's important to you, the difference what a mutual insurance company is, because a lot of people aren't aware of it, is the policyholders actually own the company. So you being a policyholder, you actually own a part of the company. And you'll notice when we talk about dividends, why this is important, how you are actually going to get dividends out of this policy.
Okay.
Okay. Now, one of the things I like about Beneva, we talked about this, but I want to go through it because it's part of the contract, is you'll notice that they have built in at no extra cost to you something called extreme disability benefits.
Mm-hmm.
Okay. Now, this has gone through a different variations, but basically what the extreme disability benefit is, you right now are covered for $1.1 million of life insurance. That's what your policy says, and we'll go through that.
Okay.
But under the extreme disability benefit, is something were to happen to you, and according to their categories, if you can do daily activities of the daily living, such as feeding, dressing, transferring, bathing, toileting, you have problems with your bladder, you have cognitive impairment, you have the right
Mm-hmm.
to take 50% of the face value of your policy up to $250,000. So in your case, you could take $250,000. So I'll tell you why this is very important. I actually had a policy like this for my in-laws,
Okay.
and my mother-in-law came down with terminal cancer. Now at that time,
Mm-hmm.
they were allowed to take out $100,000, and
Okay.
they took out $100,000. And here's the reason why: they were business owners, and they had a lot of RSPs, a lot of stock portfolios, but they didn't want to touch it. And at the time, the first thing that my mother-in-law,
Mm-hmm.
she she was 55. She didn't think anything was going to happen. So she flew down to Mexico for alternative testing.
Mm-hmm.
Then she decided to do her bucket list.
Okay.
She went to China. Her number one thing on the bucket list was to go to Wimbledon. So she took my brother-in-law to Wimbledon. She took my kids on the Disney cruise. She went to China. She went to Russia. She went throughout Europe. But what's important is, after she passed away, it never affected my father-in-law's business. He didn't have to worry about tax implications. He didn't have to worry about all of that stuff. And because at the right, she could have started cashing this stuff in. She didn't have to. And later in life, because this was 20 years ago, he's been remarried, but never affected his business or anything else. That's why this is very important. But the beautiful thing with Beneva, they add this into your policy at no extra cost. Okay? So let's go through your policy.
Sure.
Okay. So as I said, you are covered for $1.1 million. It's made up of two different areas. One is permanent of $100,000. It's called the whole life policy.
Okay.
And I'll explain that as we go.
Sure.
We also have a term policy here of $1 million. So the total face value, if you were to pass away today, is for $1.1 million. And the interesting thing about your policy, like all policies, at the very back is actually all the questions that you answered. So it's actually the application.
Okay.
So you'll notice here, you stated as a beneficiary, you wanted your husband. Now, just to make sure that's the spelling of your husband's name, correct?
Yeah, it's correct. Yeah.
Okay, perfect. Now, one of the things you should also be aware of, if things change, this is what we call a revocable beneficiary, meaning if you want to change your beneficiary down the road, you have the right to do that because you own this policy.
Yeah.
And why this is important, I'm not going to say he's going to pass away or you're going to go through a divorce, but maybe things work very well, and you want to give a portion of this to a charity. You have that right to change it at any time. Okay.
Understand. Yeah, it's revocable. Yeah.
Fantastic. So as we continue to go through here, there's lots and lots of information. The first thing you'll notice is we have your premium for $95.28. Now, the way we set this up was that $1 million is a term 20 policy. So after 20 years, those premiums do go up. So that will be your new premium in 20 years. It's actually not that bad, is it?
Okay.
Okay, but it's all listed there. The nice thing about insurance companies in Canada, by law, we have to disclose this to you.
Everything, yeah.
Okay, the next page, which is sort of a confusing page for a lot of people, you see all kinds of different values. It has cash value,